bringing in Barry Gilbert on our team. Everyone, welcome to the latest Carson's Take 5. Ryan and Barry this week. It's Thanksgiving week, right? So much to be thankful for. Barry, we'll get into that stuff, but on a personal note, what do you do all day? You're fairly new, and what are you thankful for?
Yeah, my title is Asset Allocation Strategist. So thinking about our market views and how to translate those into the portfolios that we manage, and then how to communicate it out to make it as useful as possible for as many people as possible.
What are you thankful for this year? Not on market stuff, but personally.
Yeah, thankful for so many things. My daughter's in college. She's doing great. Thankful for that. Thankful to be around family on Thanksgiving. Family and friends. I mean, how can you go beyond that? That's always the thing you're most thankful for.
Yeah, I guess I'd add food. This is a good week for that too.
Food is a good one.
That's a good one. So, well, let's dive in. I'll go first. We'll just kind of bounce back and forth. Some things to be thankful for from an investments point of view. I think we just wrapped up a really solid earnings season, Barry. The S&P 500. We like to say in our team, earnings drive long-term stock gains. Well, like 83% of companies beat on earnings estimates in the S&P 500. This time 2 months ago, we thought earnings would be up about 8%. It's coming in over 13%. And it doesn't stop there, everybody. Revenue is coming in one of the strongest we've seen in 3 years also. So with strong revenue, strong earnings growth, and oh, by the way, profit margins also solid. We think those are going to continue to drive this bull market. You think about it, the government was shut down. Sonu and I talked a lot about that. We didn't get a lot of economic data. But what corporate America had to say about the economy and earnings were still really solid. So, Barry, from an asset allocation standpoint, it feels like it's been a great year. Not just stocks, but lots of stuff has gone up. What are you thankful for on that front?
Lots of stuff. So impressed with the resilience of corporate America. I mean, that's what they do. No matter what the environment, no matter what the political environment, their job is to manage it. And they've done a really good job on that. I'm kind of grateful for diversification this year. We haven't always been able to say that a lot, but there's so many different areas of the market that have been doing well. Let me give you one.
Barry, let me jump in just for a second. There's an old saying I heard, diversification is always having to say you're sorry. This year, that wasn't the case, right?
That's right. Yeah. That's right. And we've had that for a while. We've had more than a decade where the S&P 500 has really dominated. That's a good thing, right? Happy to have the S&P 500 running higher. It says something about the U.S. economy. But just to look one place, bonds have been a big worry since 2022, Bond-mageddon. And bonds aren't going to get you stock returns. They're not supposed to over the long run. But a lot of people have some of their investments in bonds. The Bloomberg Aggregate Bond Index, it's used as a kind of broad benchmark. That's up a little over 7% this year. So tough stretch for bonds. That's a good one. And I'll give you something else just to start off that's used as a diversifier. That's gold. What do you think of gold this year, Ryan?
I think it's up a lot. I think it's 53%. And by the way, on bonds, so the ag's up 7%, give or take. That's the best year for bonds since 2020. So again, that's something I think that's another reason to be thankful. But from a portfolio point of view, how does gold help you think? Besides the fact it's up a lot.
Yeah, and another source of diversification doesn't necessarily have to be a big position, and diversifies against different things than what bonds diversify against. And so, we use gold in the portfolios that we manage. We've had it in there for a while. It's not because we said, hey, we think that gold's going to return more than 50% next year. It was really all about having that extra diversifier. The return that we've seen is a really pleasant surprise on top of that. But nice to see gold doing its job and not have it just be about stocks and bonds, but other asset classes too.
Yeah, and we'll talk about the globe. I mean, the U.S. is up, by the time we're doing this, we're going to do approximates. Approximately 14% on the S&P 500. That's actually, I'm laughing, but that's actually one of the worst global performers this year. Now, it's been one of the best the last couple of years. But how strong has the rest of the globe been this year, too?
Yeah, it's been a tough 15 years ago for international equities. But you look at it this year, the main large international benchmark, MSCI All Cap World Index, ex-US, up over 25% year to date, and solid returns. Part of that is about the dollar weakening. that helps a little bit. But nice to have those folks who are internationally diversified to be able to look at that and point to it and say, hey, that's actually done something nice for my portfolio this year.
Yeah, so you've got gold having its best year since 1979. Bonds having their best year since 2020. U.S. after back-to-back 20% gains is in the low teens, and yeah, maybe you can get a little more juice. And then you go around the globe, and you've got most global stock markets up, 20%, maybe even more. So those are a lot of reasons as investors. I think a lot of reasons to be thankful. One more I just wanted to touch on, Barry. We hear a lot, and I'm sure all the listeners to the Take 5 hear this. Oh my goodness, the top 10 stocks are so much of the market. The top 10 stocks in the United States stock market is approximately 40% of the overall stock market. So we're told day after day, it's top heavy, it's top heavy. Barry, 1 year ago right now, it was right about 40%. And when you look all around the globe at the 25 largest stock markets, the U.S. at 40% of our 10 largest companies, making up 40% of the stock market. That's actually one of the least. It's actually not nearly as top heavy as you might think when you look around the globe. So I think that's one thing to push it back against the narrative we hear that's always constantly bearish, that maybe it's not quite so clear cut that we're not so top heavy in the U.S. And maybe that's another reason to be thankful. Well, everyone, Barry, thank you so much. I think you filled in admirably for Sonu this week. This was a lot of fun. And everyone, thank you so much for watching these weekly Carson's Take 5. We really appreciate it. The honest truth, there are a lot of reasons as an investor to be thankful this year, and hopefully you've enjoyed that, and hopefully you enjoy some turkey and some football and some fun, although my Bengals are on Thursday Night Football on Thanksgiving. I don't know if there's much to be thankful about, but maybe Joe Burrow is back by the time you listen to this. We'll see. But with all of that, everyone, thank you. We'll see you next week, and it's December next week. Isn't that crazy? Take care. Thank you.
Happy Thanksgiving, everyone.